Let's just cut right to it. You're here because you're sick and tired of losing money. You're sick of getting liquidated. You're tired of seeing your stop loss get hit by a massive wick only for the price to reverse and go exactly where you thought it would. You buy the top, you sell the bottom. It feels like you're playing a game and you're always one step behind. Well, today, all of that changes.
I'm about to show you the real reason you keep losing. And here's a spoiler. It's not entirely your fault. You're playing a rigged game. The rules have been kept from you on purpose. But the great thing is, once you know the rules, you can actually start winning. Today, I'm handing you the playbook. Welcome to Crypto Whale Radar. So turn off your notifications, because what I'm about to share with you will completely change how you see the market forever.
First thing you need to understand is this. The market isn't random, not at all. It's a psychological battlefield where billions of dollars change hands. And the main weapons used in this war aren't some super complex algorithms. No, the main weapons are your own emotions. Greed, fear. These feelings aren't just a side effect of trading. They are engineered. They're manufactured and amplified to be used against you by the biggest players in the game.
You know, almost 100 years ago, a trading genius named Richard Wyckoff figured this whole thing out. He said we should look at the market as if one single, incredibly smart person was controlling all of it. He called this entity the Composite Man. We just call him the whale. Think of all the big money, the hedge funds, the market makers, as one giant calculating mind. And this mind has only one goal: to manipulate the price in a way that takes money from the uninformed herd and puts it into his pockets. You can't fight him, so don't even try. Your job is to learn to think like him, see his moves before he makes them, and ride his coattails instead of getting run over.
So look at this. This slide is the entire game in a nutshell. On the left, that's the retail mindset, the 95%. It's all about reacting. You see a huge green candle, FOMO kicks in, you buy. That's greed. You see a nasty red candle, panic sets in, you sell. That's fear. You're basically a puppet, and your emotions are the strings. But on the right, that's the whale. He doesn't react. He creates the situation. He engineers a pump with some good news to create greed, so he has people to sell to at the top. He causes a dump to create panic, so he can buy your coins from you for cheap at the bottom. He doesn't follow the herd, my friend. He leads the herd to the slaughter. And right now, I'm going to show you exactly how he builds his traps right on the charts.
Okay, let's get practical. Before you even dare to look at that shiny new altcoin you think is headed for the moon, you stop. You open one chart, and one chart only. You open the Bitcoin chart. Until you know what the king is doing, everything else is just dangerous noise.
I don't care how great the story is behind your altcoin. I don't care how bullish its chart looks by itself. Listen to me. If Bitcoin is dumping, if the king is bleeding out, your precious altcoin is going down with it 99% of the time. Why? Because Bitcoin is the crypto market. It dictates the sentiment for the entire asset class. So figuring out Bitcoin's daily trend, is it up, down, or just chopping sideways, that's the first, most important, absolutely non-negotiable step of any trade. Get this wrong, and you've lost before you've even placed your bet.
So, now that we're on the right chart, what are we even looking at? This isn't just a bunch of red and green bars. It's a story. It's the whale's entire playbook printed right there for you to see. You just have to learn how to read it. And the language starts with the simplest thing of all, the candlestick.
Every single one of these candles tells the story of a battle. That fat part, the body, that tells you who won the battle in that time frame. A big green body means buyers were in total control. A big red body, sellers absolutely dominated. But the wicks, those little thin lines, that's where the real juice is. A long wick on top means buyers tried their best to push the price up, but sellers came in and slapped it right back down. A long wick on the bottom, that means sellers tried to dump it, but buyers put up a huge fight and pushed it back up. The wicks, they show you where the pain is.
And once you get that, you start seeing the whale's footprints everywhere. See a bunch of candles with long wicks at the top of a big move? That's not just selling pressure. That's the whale selling his bags. He's slowly feeding his sell orders to all the retail traders who are greedily buying what they think is a breakout. The opposite is also true. Long bottom wicks after a big drop? That's the whale buying up all the panic sellers' coins. And when you see the candle start getting smaller, the body's shrinking, the market is losing gas, it's running out of steam, and the whale is getting ready to spring his next trap.
Now let's talk about the actual battle lines, support and resistance. You know them, you draw them. And guess what? The whale knows you draw them too. He knows that millions of traders just like you have their stop losses placed right below that support line. So what does he do? He uses that against you. He intentionally pushes the price just below that level. That triggers a waterfall of stop loss orders, and here is the kicker. When your long position gets stopped out, it creates a market sell order. The whale needs your forced selling so he can fill his own gigantic buy orders at a discount. He's not just taking your money, he's using your liquidation to fuel his reversal. That is a stop hunt. And he uses these obvious levels like cheese in a mousetrap.
So if these basic levels can be faked, how do we get an edge? How do we know if a breakout is real or just another trap? This is where indicators come in. But listen, we don't use them like crystal balls to predict the future. We use them like X-ray goggles to see what's really happening behind the price action. They help us call the whale's bluff. And I'm about to give you a dead simple, incredibly powerful toolkit right now.
Keep it simple, stupid. You really only need a few. First, volume. If you see a monster green candle break a key level, but the volume is just pathetic, it's a trap, 100%. It means the big money isn't in on the move. It's a fake out designed to suck you in. Real moves have real money behind them. Second, the RSI. The whale loves this one. He'll push the price up just enough for the RSI to scream overbought. All the textbook traders start shorting. Then he pushes it even higher, liquidating all of them before he finally lets it drop. And third, the MACD. This shows you momentum. Here's a pro tip. Look for divergence. If the price is making new highs, but the MACD is making lower highs, that's a huge red flag. It means the move is exhausted. It's a ghost.
Now, for the really big picture. The institutions, the whales, they don't really care about the 5-minute chart. They're playing a longer game. And they watch the big moving averages, specifically the 50-day and the 200-day. Think of these like giant ships. They turn slow, but when they do, the whole ocean moves with them. When the faster 50-day crosses above the 200-day, that's a golden cross. This becomes a self-fulfilling prophecy. Every big fund sees this as a green light to buy. The opposite is a death cross, and it signals a long, cold crypto winter. The whale doesn't just see this coming, he starts positioning himself weeks in advance to ride that massive wave.
So you learn about all these indicators. You slap them all on your chart, and what do you get? You get this. A total disaster. A mess of lines all telling you different things. This isn't analysis, it's paralysis by analysis. You can't think straight. You second-guess everything. And this is exactly where the whale wants you. A confused trader is a broke trader. He makes his money off your confusion.
Now, let me show you how I do it. This is my screen. Clean, simple, powerful. Every single thing you see here has a very specific job. If it doesn't, it's gone. And I'm able to get this level of clarity because I use tools that are built for it. That's why I personally do all of my trading exclusively on BingX. For me, it's just the most reliable platform with the best, cleanest interface out there. It's what I use for every single analysis you see on this channel. It's a professional's tool.
Because of that, I worked something out for you guys. If you sign up to BingX with my personal link down in the description, you'll get the best sign-up bonuses they offer. But that's just the table stakes. What's more important is that you get access to me. My partners get exclusive bonuses directly from me, I share my personal chart setups, and you can actually message me for help with your trading. Look, this isn't just about using a link, it's about joining an inner circle of people who are serious about winning this game. Okay, so now you have the strategy, the tools, the charts, you're good to go, right? Wrong. All of that stuff is totally useless without the final and most important piece of the puzzle, your psychology. The technical stuff, that's maybe 20% of the game. The other 80%, that's fought right up here, in your head. This is where the real war is won.
Let's talk leverage. You think it's a tool to get rich quick. The whale sees it as a giant, glowing target painted on your back. When you go 100x long, your liquidation price is just a stone's throw away. Well, guess what? That price becomes a magnet for market makers. They will literally push the price to that specific level just to wipe you out. It's called a long squeeze or a short squeeze. They hunt clusters of liquidations because when you get liquidated, you're forced to buy or sell, and that cascade of orders is what fuels their massive moves. So please, stay away from high leverage until you know what you're doing. You want to know why 95% of traders fail? It's not because they don't know about support and resistance. It's not because they use the wrong indicator. It's because they lack the single most powerful edge a trader can have: patience. This market is designed to make you impatient. You feel like you have to be in a trade all the time. You get bored, you chase a pump, you revenge trade after a loss. You force a setup that just isn't there. And every time you do that, you're just handing your money over to the whale.
Trading is not about action.
It's about calculated inaction. Think of yourself as a sniper. The amateur grabs a machine gun and just sprays bullets everywhere, hoping you hit something. He runs out of ammo, his capital, in like 5 minutes. The professional sniper? He can lie still for days, just waiting. Waiting for that one perfect A+ setup where everything lines up. He's not bored, he's hunting. One perfect trade is worth 1,000 random gambles. You don't get paid to trade, you get paid to wait.
So you've got a choice to make. You can click away from this and go back to doing the same old thing, being the sheep, reacting to fear and greed, and feeding the whales. Or you can make a decision, right here, right now, to start thinking like a hunter, to stop gambling and start trading. It's time to join the winning side.
This is why you need to subscribe to Crypto Whale Radar and join our private Telegram with the link in the description. Look, I don't just talk theory, I give you real, actionable trade setups. We break down whale traps as they're happening in the live market, and most importantly, I'm in there every single day, personally helping you apply this stuff to become a profitable trader. You're not going to find this anywhere else. This is your chance to stop being the prey and finally become the predator.
If you remember only one thing from today, make it this. From now on, every time you look at a chart, every time you see a headline, every time you feel that itch of FOMO or fear, you stop and you ask yourself one question. What does the whale want me to do right now? And then you think about doing the exact opposite.
So what's it going to be? Is your next trade going to be an emotional gamble or a cold, calculated setup? The choice is yours. And to make sure you get it right, click on this next video. I break down the single most common chart pattern whales use to trap traders like you. You're probably using it right now, and it's costing you a fortune. Don't be a statistic. Click the video, and I'll see you there.